But now, before markets open, let's get Raamdeo Agarwal in. Raamdeo, morning. Before we talk about your earnings, what have you taken away from earnings season in general this time around? Happy or subdued?
It's more or less in line. I mean, 8-9% aggregate growth. That's what our expectation was. Few surprises always are there, but I think on the whole, earnings are on track.
What about the earnings from Motilal Oswal itself? How has the quarter been, and what have the key disappointments been this quarter around?
Yeah, actually, the disappointment is the sequential quarter, where actually after doing 24-25 crores in Q4, we ended up doing only 20 crores this quarter. So we thought that there could be kind of an upturn in the market continuing from Q4, but it didn't. It fell back to as low as that of Q1 of last year. So we did almost flattish kind of bottom line compared to a year back, but sequential quarter has been kind of pretty depressing.
Is retail or HNI participation just not picking up, Raamdeo, despite markets not going down significantly below 5,000 Nifty?
No, this is the biggest. What is happening is that though the asset class wise equities have done by far the best in this year, still people are hesitant about allocating. The fear is total, and despite performance and kind of non-performance of real estate or even gold, and I think probably the most attractive asset class is of fixed deposits and fixed income, not the equities.
Okay, time for the market opening, so we'll get back to Raamdeo in just a minute. Markets should be opening here. The group open okay, 30 points up at 51.33, Sensex up 100 points, just shy of that 17,000 level. So we are opening with a bit more strength, continuing from the up move that we saw on Friday. 51.40 now, looks like it's journeying close to that 51.50 level, which we failed to close above or take out on Friday, so we are making another attempt to get there. 5145, 5146 now, so 47 points up. That's not a bad opening, almost a 1% gap up for the Sensex and Nifty. ICICI Bank is your star, that's gone up to 950 now, deservedly after very good numbers on Friday. Then we've seen Axis Bank doing well, 2 percentage points higher there. So private banks are carrying the index. We've got strength in metals, as you would have expected after the global up move. SAIL, Sesa Goa, Sterlite, Tata Steel, all those stocks are up between 1.5% to 2.5%. So good start for many of the metals. As we speak, the Nifty is at 51.50. So it's gone right back to the highs of Friday. Let's see how it negotiates that level now. That aside, we've got strength in Tata Motors, which is pulling back. There's a bit of up move happening in the IT space. So TCS and Infosys are also not looking too bad. Among the heavyweights, Reliance and L&T have started the day well, and IDFC hasn't done too badly. In pharmaceuticals, there's strength in Cipla this morning, and Ranbaxy too. So both the pharma heavyweights have done well. Reliance Infra, JP Associates, L&T and BHEL are all up 1% plus. So infrastructure has not started the day too badly. Mild reaction from 51.50 again on the Nifty, back down to 51.45. So doesn't seem like it's crossing over with any great momentum this morning, despite the strength in some sectors. Maruti's response to its results or the news from Manesar has not been great. It's down to 1,090 now, 2 percentage points lower. Ambuja is reacting from last week's up move. Power Grid is soft. Bank of Baroda is down 0.5% before its results. And Bajaj Auto and Hero Motorcorp also look very tepid and sideways. Nifty is fine. It's made an up move once again, back to Friday's highs, but now it's the challenge on whether it can cross over. How are mid-caps opening, Sonia?
Well, the opening is fine, so up about 0.7% for the mid-cap index. The advanced decline ratio is 500 stocks on the advancing side versus less than 200 on the declining side, so that's a positive indication. A couple of result reactions. IRB Infra is reacting positively to a solid set of numbers, so up 4.5% over there. REC is up about 2% post its numbers. IGL, where the net profits at 85 crores were higher than street estimates, is up almost about 1.5% or so. And let's see how United Spirits reacts to those set of numbers. Volume growth concerns persist, but as you can see, the margins have come in better than expected, so up almost 1%. So that's pretty much the list of result reactions. On the downside, you have a couple of stocks that are reacting to news. So Deccan Chronicles is down another 9% today on big volume. Subex is down almost about 7% or so. Pantaloon that we spoke about earlier is down almost about 0.5%. So that is opened up with a gap down opening. In some more result reactions, Thomas Cook is up about 5% as the consolidated net profits have jumped about 44% on a year-on-year basis. And Crompton Greaves, where they've bought that Spanish-based company ZIV Group, has gained almost about 1% or so. So that's pretty much all the newsmakers that we're seeing today. The mid-cap index is fine, so up almost about 0.7% for the index. A couple of these stocks like Tulip Telecom, etc., have seen a bit of a recovery, so 5% up move on that. And just watch for how Union Bank opens up in trade this morning after the cut that it saw last week. So up almost about 0.8% on Union Bank. All in all, it's moving in tandem with the Sensex and the Nifty, up almost about 0.7%.
Some of the beaten down mid caps are stabilizing, like ERA Infra 3%, Tulip Telecom 5%. New circuit filters on these names, by the way. And Pipavav is up 3% as well. I think the promoter, Skill Infra, bought 50 lakh or half a crore shares of Pipavav on Friday. So that probably is the reason why that stock is moving up. And you've got stability in Hindustan Construction and SKS Micro. So some of the, and GVK Power as well has not done too badly. But still, Deccan Chronicle down 8%. Subex is a problem stock and it's now languishing at 14 rupees, 8% lower today. So not everything has stabilized in the troubled mid-cap space. That's how we are opening up. Stable note, 51.40. This is the level that we saw on Friday afternoon as morning as well. So let's see how we negotiate that. And the advance decline ratio is also good. 560 advances to 200 declines at this point in time. Raamdeo Agarwal of Motilal Oswal has been speaking to us. Raamdeo, what is stopping your worry list now? The fact that monsoons are appearing very difficult, or is it the fact that 10 days have passed nearly after the presidential elections, but we have nothing from New Delhi?
Yeah, so I think this is a repeated kind of thing. First, we thought that once UP election is over, then we'll get a lot of stuff from Delhi, and that was really expected one, and nothing happened. Now, when they started talking about presidential election, I was already very kind of a doubtful whether. I mean, it is really not politics, and why there should be so much of importance to this. So I think it is expected lines. Very little is happening, and I would not expect much coming from there. So I mean, I would rather focus more on quarterly results, which are right now underway, and we are in thick of it. Where what is the condition of the businesses? That's very clear. Or maybe tomorrow's interest rate policy, rather than bothering about what Delhi is going to do.
Do you think anything can come tomorrow, Raamdeo? Because inflation is high, monsoons are bad, crude has gone back to $107 again. Why would the RBI cut?
Yeah, going by their public stance and real hard facts on the ground about the inflation, and lack of initiative from Delhi to really contain the deficit. I mean, actually, my own expectation is very low. Though I think that in next 12 to 18 months, things will be significantly, interest rates will be significantly lower. But there has to be a story for it to happen. And maybe the growth has to completely slump. Maybe the tax collection has to completely give way. Because inflation is just relenting to go down. And now with the monsoon not being so good, the pressure on prices will be even higher. So it's just not a very conducive environment for very deep cut in the same. But they may respond by releasing some more liquidity by CRR, or maybe even 0.25% cut. But expectations are very low.
A few weeks back, we were all hoping that when crude had gone down to $89, that maybe our fiscal problem at least is getting resolved. But now again, there is talk about global risk on, quantitative easing. Crude's gone back to $107, and we've seen no pass-through. Are you getting worried on that front, that things were looking like they were improving, but they seem like they're going back to trouble areas again?
Whenever there is external environment is challenging, it's not very conducive. I mean, it is us, we have to do our things. I mean, we have to set our policies right, wherever mistakes are there, wherever blockades are there, how we can resolve the investment pipelines, how we can make it non-bureaucratic, or how we can have a very judicious policies. So external environment we cannot control. I mean, $89 we are celebrating, and again it is $107. So it's almost a one-man army against current government policies, where they're sitting just numb. I mean, whether it is $150 or $50, the policy remains same. So in that kind of environment, it is very tough to extrapolate anything, because even global markets are not that easy. I mean, in 1 month it can fall, even things like oil can fall by 30% in a month, and then get back almost 20%. So it's a very unpredictable environment, very confusing, and even more confusing is the policies from Delhi, being no policy at all. So I think it's not a very predictable kind of scene at this juncture.
What do you make of public sector banks, Raamdeo? I know you track some of them quite closely, but last week there was a real scare in the market when the asset quality picture started unfolding. Do you think we are now beginning to see the ugliness of the NPL cycle this time around?
Yeah, clearly the stress on the assets is very clearly visible, and they are the people who are with wide network and corporate, all kinds of corporates get loans from them. So SMEs and large ones, good ones, bad ones, all of them, they get loans from public sector. So one of the things which is coming out clearly in this results is that the quality difference between private sector book and public sector book. Clearly public sector banks are under major stress in terms of the quality of, the quantum of NPA which they are declaring. Of course, there is a recovery bit also from the earlier NPAs, but net it is looking to be bad. And some of the sectors like power projects and telecom projects which are still under construction, I mean, they have not been capitalized in the books of the companies. So technically they cannot be NPA in the books of banks. So people are getting scared that if by chance somehow these projects have to go on stream and in losses, they will never be able to repay the loans and underlying interest. So the underlying book is looking to be even worse. But all this care is already there in the price. I mean, PNB is 8.8 times book with 5,000 crores kind of profit. So my sense is that yes, there is a lot of scare. I mean, it typically happens at the top of the rate cycle, but bulk of the this fear is already there. I mean, in the price. That's my sense.
Stay on, Raamdeo. We'll come back in a minute. It's not been a bad start to trade. Better for the large caps than for the mid caps. The mid cap index is up only 0.5%, while the Sensex and Nifty are up 0.8%. And there are still problem areas in some of these mid cap names like Pashwanath, Deccan Chronicle and Subex. But for the large caps, propelled by the frontline private sector banks and the metal names, we've got up to a reasonably good start this Monday morning. More on that after the break. Welcome back. 51.42 on the Nifty. That's up 42 points. The Sensex up 147 points. So it's not been a bad start to trade. The mid-cap index is up 0.5% as well. But as I said, individual stocks like Subex and Deccan Chronicle remain under a lot of pressure. The rupee will come up on your screen too. That's also started the day around the 55.30 kind of level. So as we speak, rupee is now at 55.26. But here's small caps and how they've opened up. Rima.
Good morning, Udayan. The index has opened out well. A few stars include Ricoh India, where there's a board meeting today where they will be considering a delisting proposal. The promoters of the parent company hold close to about 73% stake in the company. Raj Oil Mills has started well. They've made an announcement that they've closed the GDR issue and they've totally raised about $7 million. On the results side, it's PNB Gills. Great set of numbers. There has been a turnaround, reported a profit of 17 crores versus a loss of 4.5 crores on a year-on-year basis. Sarda Energy, where the profits have nearly doubled. It's 20 crores versus 11 crores, and Kolte Patil is the other one where the profits have more than doubled on a year-on-year basis. Profits 10.6 versus 4.6 crores. And Mastech, which has been reporting good financials and an improving trend, that stock continues to gain higher. It came out with its numbers on Friday. That stock rallied then, and today as well it's holding up in the green. On that note, it's back to you.
Thanks, Rima, for that. That's small caps and how they've opened up. The Nifty slowly inching back towards that 5150 level. Raamdeo Agarwal has been talking to us. Raamdeo, what about Maruti? I mean, do you buy this weakness, or are you also getting very worried about how their labor problems keep persisting?
Yeah, it's a almost annual affair kind of thing, and this time it is so horrifying in the sense that to the extent the violence went. So I think there has to be some fundamental thought about what is the labor policy they have and how this entire industrial belt. I mean, from both sides, from labor side also, law side also, government side also, and because size of opportunity for them is staggering, and this company has tremendous position in that entire entry-level cars which is needed in India. But I mean, if industry is not run in a very cordial fashion, it's very tough to see how the future of the company will be built. So my sense is that clearly it unnerves the investors, and with this kind of breakdown. And but this opportunity is such, and their positioning is so kind of unique. I hope they'll find solution, and anything below 1,000 rupees, it should be a good investing opportunity.
You've seen numbers and communication from both Hero Motors and Bajaj Auto. Which one would you have higher conviction buying now?
Right now, I would love both of them. Actually, both of them are very good. The issue is that the shape of competition from Honda. I mean, my disappointment, my apprehension is not coming from current performance or anything like that, slow down or a little bit. I'm really want to see how Honda competition shapes up in next 2, 3, 4 quarters, and they are talking large numbers, and how it impacts the local marketplace, and how the Hero, Munjals and Bajaj, they respond to the new aggression which Honda brings on the marketplace. So I think that's a kind of some kind of rethinking about what to buy. But my sense is that 13-14 P multiple, both of them are tremendous buys.
What do you do with the BHEL, Raamdeo? Old blue chip, languishing at 7p at just above 200 rupees. Nobody wants to buy it. From a medium-term perspective, would you consider it, or too many challenges?
No. It's medium-term particularly is very tough, because their order book will slow down, and the current, what we are seeing in banks in terms of NPAs, I think lack of order book will start telling on their. It's a company with a high operating leverage. So the moment you bring down your execution from say 100 to 80, the profits don't come down by 20%. Profits will slump by 30, 40, 50%, because they have a huge operating leverage. So the lack of order book build up in last 12 months or 18 months, and if it prolongs for another 6 or 12 months, is going to have telling effect in 2 years' time, once their current order book gets exhausted. So I would be very kind of skeptical in the medium term till the power sector policies are very, very clear.
Let me throw another blue chip at you. Tata Steel languishing below 400 rupees. Would you buy it here?
No way. I mean, their capital allocation, large capital allocation, literally half the balance sheet into chorus, is a big problem, and nobody has clarity about what's happening in Europe or what will happen in Europe, and what will be the prospect for this particular unit. So if it is standalone Jamshedpur and whatever new setup they are going to have, it's a brilliant piece, but I mean, making $300 EBITDA, at least from the Indian operation, is not going to be difficult. But I mean, how much they lose in chorus, that's very difficult to figure out.
Okay, let me ask you about outperforming stocks then. Would you buy Lever at 460 plus?
I would consider it. I would. I missed it. I mean, from 100 rupees till 450, we are still wondering when to buy, thanks to too much of analysis at our end, but our lack of understanding of Lever. But I can tell you only one thing. In 2002, it was #1 company. Then it lost a position to 25, 26 in next 5, 7 years with no return for 10 years in one of the biggest bull market. And now when the markets are not delivering anything, it is making a huge comeback. And my sense is consumer-facing company, determined leadership of Mr. Paranjpe, and the kind of action I am seeing on their side, it looks that this is again going to regain position and give a tough fight for #1 position in next 2-3 years. So it's a very interesting bet it could be.
You spoke about these companies going through many years of pain without delivering returns. Maybe Infosys is going through a phase like that on its own. Do you think you have to wait many years for returns there, like Lever made people wait, or Reliance is making people wait, or do you think this is the right time to get in?
My sense, see, I'm still invested in Infosys, and this guidance thing is it then going overboard, in the sense that if you look at the last quarter performance, is about 34% up in terms of their performance and profits, and TCS did about 37-38%. So performance so far is good. If they were not in the business of guidance, then I think that's how the secondary market works. So we would have taken it. We would have looked upon as one of the best results. So my sense is that yes, there could be a little challenge, but at 12-13 P multiple, this is not an average company. Neither this is an average story. So I think opportunity for Indian tech is very large. These companies are leadership companies. There are only 3-4 companies of this size and stature. So my sense is this is not from this valuation it won't be a decade of lost returns. They have growth underlying.
Sure. How long do you see the pain in the broking space continuing, Raamdeo? Just to get back to your own performance, it's been many quarters on the trot. You guys have not started reporting losses yet, but all of us hear stories about how difficult things are for most brokers. Given how long this pain cycle has lasted, what's your expectation for next year and the next few quarters?
Yeah, this reminds me of 2003 when we made first time losses after 15 years. Though it was a much smaller this thing, but the expansion which happened between 2003 and 2010, 8 or 9 was staggering from our point of view, led by technology and dematting of accounts, digitization of the entire process, and entrance of new entities of different size and completely well funded and all. So clearly there is a overbuilt up of infrastructure. I think 1 lakh crore per day transaction is not a small size of the market. So there is a business out there, but just that it is spread out too thin across the number of players. So I think yes, markets can recover, volumes can go up double from here, but I think the real challenge will be what will lead to natural consolidation or forceful consolidation. So I think that process must start, and that's the only hope. That's the only hope in the future, that somehow the top 4, 5, 10 firms will start getting bigger market share than what they have right now. But what will that lead to? That's not very clear. And as far as the pickup in the volume is concerned, which is going to be actually a natural growth driver, we don't see. Last 4 quarters have been very, very dull, and even today things are pretty bad. So when things can happen, one doesn't. But my sense is another 3-4 quarters, and we are actually passing through the worst.
Good luck, Raamdeo. Thanks very much for joining in today to talk about your numbers and about the market, which has not done badly. It's picked up and it's moved past 5150 now, albeit by a couple of points. The Sensex is beyond 17,000 now. So playing along with global markets for the moment with a 1% up move on all indices.